Open banking is obviously of much more relevance at present to bankers than it is to our wealth management members. But Alan and I have just been talking from my incredibly tiny knowledge base about how some of the principles behind open banking could become very useful indeed to helping that big unadvised category of people out there, the people who after RER found they couldn't get advice which was formerly free in inverted commas on commission payments and are largely unadvised. And for instance, this is a big campaign on the part of our friends at PIMFA, the former Wealth Management Association, to find a way to get all those unadvised people, essentially anyone with less than, say, £250,000 in liquid assets, including pensions, just can't find a way to get what they see as being decently priced advice. I'm going to stand down now. Thank you for coming in. Thank you for watching on CISI TV. First off the block, when I run in this order, is Alan Ainsworth, who is Head of Policy at Open Banking. And Alan is a great guru in this. So Alan, thank you.
Thank you. Thank you very much indeed. Yeah, I was once a Chartered Institute of Bankers thingy, which I think was an ACIB in the day. But I gave up my membership because it cost me £30 a year, so I'm no longer allowed, apparently, to use those initials. But that was a long time ago. And it's worth just starting off with what I'm going to talk about today, which is what is open banking. There's a lot of, I'm assuming you all came to this knowing what it is, but let me just quickly make sure we're all on the same page. Where we've come from. So why do I exist? Why does the open banking implementation entity exist, and what is it trying to achieve? And then where are we now? How are we doing? And then where are we going? What's next? What do we have to do next? What's our 2020 plan? And then what else can we do? So the kind of crystal ball gazing a little bit at the end, if you'll indulge me. So what is open banking? Open banking is a way of enabling a person or a business to access their data and share it securely with a regulated third party, so that third party can provide them with useful services or products. It's also a way of enabling one of those regulated third parties or a different one to initiate a payment to a payee. Pretty straightforward. I'm hoping you all understand that there are two bits to open banking. There's the account information piece, the first bit, and the payment initiation piece, which is the second bit. That's what it is. So where do we come from? And I think rather than go through lots of different acronyms and legislative or regulatory measures, let me just give you three words. And one word is competition. So we are here, open banking exists to increase competition. Specifically, we're here because the Competition and Markets Authority created OBIE as one of the remedies to increase competition in current accounts, retail current accounts and business current accounts. And it said if you can share that data with a third party, that third party might be able to provide competitive services to banks. For example, through unbundling that core bank account into its component parts and potentially offering you credit or savings or sweeping facilities or account comparison, loads of different things that may come about as a result of sharing that data. So that was a competition remedy. There was also, if you look at the Brussels remedy, the PSD2 remedy, that was all about competition in payments primarily. So providing new ways to pay and to be paid. So that's where we've come from, PSD2, CMA order, innovation and competition. And there's also within both of those, particularly within PSD2, something about security. So what some of the people in my in open banking ecosystem will talk about is that open banking existed way before the CMA had a light bulb moment or the guys in Brussels had their light bulb moment. We call it screen scraping, other people call it credential sharing, but there have been organisations doing that for a number of years and still do it in a number of other geographies because they don't have APIs and even APIs have existed for a while as well, but more bilateral rather than standardised APIs. So information has been shared, and if any of you are small businesses, you're probably doing it already with your accountancy software package. Or you may have migrated using open banking standards. And the difference between the open banking approach or the API approach and the credential sharing approach is that word credential sharing. You are not sharing your password with a third party using the open banking consent framework. And that's an important security point. And the important point here to reference this is when the guys in Brussels are designing PSD2, it was because the third parties were saying, these banks aren't letting us get the data. And the banks were saying, it's insecure and it's not fair and it's unreasonable. So there was this kind of unholy alliance that said, you, the banks, must provide that data provided these guys are regulated entities. Okay, so there was that quid pro quo that was created by PSD2. So that's why we're here and what we're trying to do. So where are we now? What have we got to? And I quickly went onto our own website. I encourage you to go to openbanking.org.uk. There are 180 now regulated providers in the open banking ecosystem in the UK. That's 116 third parties, 64 account providers, and of all those, 53 entities are actually in production providing a service to an end user at the moment. Okay, so it's happening. There is activity, a lot of activity. A lot of third parties out there doing things. Most of those, as you can see from the numbers, are testing products. Some may not be yet regulated by a national competent authority, but there are organisations out there doing things, offering services to end customers. But that only tells one part of the story. Where are we really in terms of implementation? I would say we're nearly at the end of my definition of implementation. And my definition is we've built the standards are being implemented or have been implemented by the CMA 9 banks, the 9 banks that come under that CMA order, and are being implemented or have been implemented by all the other ASPSPs that come under the jurisdiction of PSD2. So that's a good thing, and it's a really positive thing that we've got so much movement and propositions in the ecosystem. But the real judge of success is if we have third parties actively providing services to customers and small businesses. And where are they? Well, many of those were screen scrapers, the ones of that 53, the really active ones, were already doing a lot of this stuff. They were screen scraping and they're now migrating. And as a result of the FCA giving them a bit more time to migrate, we'll see that migration taking place between now and March 2020. And we're seeing a lot of movement in terms of that migration from the old big screen scrapers and the old big users of bilateral APIs between a third party and a bank. They're all increasingly using the open banking standard to do that. There's a lot of movement there, and of course there's a lot of innovation as more of those third parties start to offer services to customers. But there is work to do, and the big work to do is to ensure, from my perspective, that what's created is usable. So it's all very well having APIs out there, but the TPPs have got to use them, and they've got to be able to provide services to customers that are really usable. So it's important that the API works all the time, that the third party knows when there is downtime, that it works quickly, so availability and performance are important, and the conversion rate from when the customer starts the journey to the end journey should be as close as possible to 100% as it can be. So we're working on that. There's still some work to do on that to get that as good as it needs to be. And as more and more banks get better at this, and as they get more comfortable doing this and the third parties get more comfortable using what the bank has produced, I think we'll get much closer to that end result of what I call usability, which I include in their customer experience, I include in their performance of the API, and I include in their availability of the API and the dedicated interface. So getting all that right will take us time, and that's our focus between now and the end of the year and into March 2020, which is the end of the FCA adjustment period. But I think the good news is we are getting there, the numbers are getting better, and of course the FCA and OBIE are going to help make sure that happens. And I think one of the positive things about what we did in OBIE, when I started in OBIE back in April last year, when we looked at customer experience, there's no way I as a TPP will come into the market and migrate customers, because the customer experience was better screen scraping than it was using an API. I think that is fundamentally the other way around today, and that's good. It's got to be better to get new services in, and that's happening. But the focus of OBIE from when I started through to now indeed was customer experience and that customer journey, and making that not 17 clicks, and I exaggerate for the cameras, but not lots of clicks and lots of screens and lots of information, to 2 or 3 clicks, 1 or 2 screens, and making it quick and speedy, intuitive, easy to use. The FCA, EBA would use things like low friction, okay? But we all know what we mean. We mean a journey where the bank's bit of that journey is just authenticating the customer and then sending them straight back to the third party, because that is the bank's sole role in this ecosystem, is to authenticate the customer and send them back. And if you can authenticate the customer using a mobile device, which is that where the customer is entering the TPP, that makes life so much easier. And that's why we developed app-to-app authentication and added customer experience guidelines to our standard. So that's kind of where we are. And I know I'm kind of speaking quite quickly, but I'm conscious that everyone wants to speak, and we've got lots of other better speakers than me and going to take you into very different places than myself. But where do we go from here? And I've talked about the usability, I've talked about adoption, but the real focus now from our point of view is ensuring that the outcomes measure up to the objectives. So if you think about it, there are a bunch of objectives, policy objectives set by CMA, HM Treasury, PSD2, FCA. Everybody said this is what we want to achieve. What we want to make sure is that actually that's being achieved. Are we seeing more competition? Are we seeing more different payment solutions solving some of the blockers for payments for businesses and customers? Are we seeing that happen? Are we seeing the fundamental current account being unbundled so there are new offerings in the market? It doesn't have to be new organisations offering that. It could be the banks acting and behaving more competitively for this to happen. But are we seeing what was envisaged at the beginning? And we're developing a consumer evaluation framework that will be launched sometime early next year, which will be the base upon which we measure those outcomes and see if the policy objectives are delivered. But finally, I said, what next? What's kind of in my mind about the next steps for open banking? And I think we've developed something that actually enables far more than sharing payment account data, which happened to be the start point of the CMA order and PSD2. We've developed a trust framework that can be used for sharing data between trusted entities. And we've developed some other protocols and standards that could be used for any type of data. The security protocol is not an open banking standard, it's a worldwide global standard. So why would you not use that for sharing more financial data? And the FCA has picked up on that and has got an open finance working group, steering group, working on that today. And what about other types of organisations sharing data? So what about telecoms? What about energy? What about other particularly regulated industries where you can check a regulatory permission of a data obtainer, if you like, and the regulatory permission of a data provider? And so regulated entities are on the wish list of the Department for Business, and that project is known as Smart Data. So my view is that we've created a blueprint for secure, consented ways for individuals to access their data from wherever that might be, that actually enables a consumer to exercise their right to data portability under GDPR. So I think that happens, and I think the open banking framework and ecosystem enables that to happen. So we are having those conversations with all parts of government, whether that's BEIS, DCMS, GDS, HMT, lots of different initials, some of which you'll know and some of which will probably change if and when there's another government. But it's all very interesting, and we think there's lots to look at that we've been successful at. But what I would say is I think we have got evidence of success and evidence that we're on the right track. But if we did it again, we would do it quicker, we would do it cheaper. And the reason for that is the reason that I think we're in a good place to help other sectors on their open data exchange programs. Thank you.
Alan, thank you. That was a great tour of the horizon to open this up. Thank you very much indeed. Now, Connie has just flown in here, especially from Amsterdam, to do this talk for us today, and thank you very much. One of my colleagues asked Connie how long she'd known me, and when Connie told her, that my colleague said, oh, I was only one then. Now, we don't employ child labour here. We try to comply with the Modern Slavery Act, and most of my colleagues are graduates, so I'll leave you to make up your own assumptions there. Connie has worked in financial technology worldwide for some time.
30 years.
30 years, yeah. And we first met when she first launched into that career, and she's recently launched something called Bankify, which I'll let Connie explain. Yeah. Connie, thank you for coming.
Thank you, thank you. Thank you for having me. And I'm delighted that this time you're not having this wonderful surprise. One story, 30 years ago, when I just first moved into the UK, totally unaware of all your local celebrations and events. George said, I have something fun for you. Why don't you come and speak at a Burns supper? Well, you know, I'd figured out he was a poet. And I sort of went to something called the brewery. I thought, well, it can't be that weird. And then I started to get nervous because he wanted to rehearse with me. And over a few good bottles of claret, we rehearsed. And with my perfect Dutch G, we came out to a very good pronunciation. But I ended up doing the ode to the haggis to a few hundred bankers. So I'm very pleased that you're not doing that to me today. So that all said, I'm delighted to be here, and I'm delighted to be sort of the international voice on the panel. And I think I can quickly follow in your footsteps, because yes, although open banking, of course, is a sort of regulatory instigated event, it is also about societal change. So in countries and in parts of the world where there is no legislation on the horizon or on the menu, it is still happening. And so I'll tell you a little bit about our company later, but when my business partner, Mark Hartley, and I founded the company, we thought anything around regulation is always a good idea because it's a must proposition. But we also quickly figured out that although, yes, PSD2 in Europe, open banking here, is a regulatory thing, it is merely a directive. And so you really have to look at a wider scope. And it is societal change. If you look at Australia, where they have got further reaching regulation that we've got on the menu, there's a strong appetite. So if I look at where we're going with our business, it starts in the UK, it's the most mature market now. Australia is happening next, Singapore, where I come from, mainland Europe, your best friends in the world. We are still very busy with the infrastructure, putting all that in place. We're not really busy yet with the business derivatives of it. But in America, we see a strong appetite for it as well, and we know that the regulation there will follow 30 years behind whatever they're doing. So, you know, it is happening everywhere. Another point you made, which I think is important, is there's the law of unintended consequences, where we saw that the whole open banking and PSD2 thing was aimed at creating more competition. We, and by this I mean we, Bankify, feel that the bankers are in the best position to win. And then I need to make a small addition, the banks that get it. I don't know whether you saw the McKinsey banking report that came out yesterday. Absolutely, I can recommend the read, very good read. But literally there are a few categories, and banks who do not get it will absolutely fail. It doesn't mean that you only will be successful if you totally get it, because some percentage of banks will totally get it, and the other banks in between have to find a niche where they get it and become a national hero with a particular focus or a segment. And this is where Bankify for us came in. Just to very briefly say, I subscribe to everything you say, and most banks look at digital technology and they start digitizing existing processes. That might give you some cost savings. If you want to look at the revenue side, there is only one road to go, and that is the sharing data. Because banks have to regain their position of trust they probably still have, but love and closeness and customer centricity, which we've been speaking about for 30 years, as long as I work in it. When you use relevant data from different sources, you can become meaningful again to your customers. And let me give you an example which then describes what we do for a living. What we say is, if you're a bank and you have open banking, you can look at the consumers, which is what all the banks initially did. We're not going to put our money in that, because consumers are fickle. They open an app today, they don't use it tomorrow. They open accounts with various banks and only use the one. They are very well served in general in the Western world. There's hardly any money to be made out of them. So what are you going to gain from making those customers happier? All you do is adding cost, like we did with multi-channel. So we said, what is the segment that really needs help? And that's also our purpose. There's no life, no business without a purpose. And it's not a marketing slogan. But Mark and I felt that sole traders and small business owners and all the people who, through the recession, lost their job, became self-employed, and are holding their back straight, as we say in the Netherlands, and are an extremely useful part of our economy, have been underserved, if not served at all. We either push them into consumer banking and they don't get access to the services they need, or we push them into SME and they get overcharged for products they don't need, way too big. So what we said is, our purpose is to serve that segment of the market first, and then grow with them as a bank, as they become an SME, or some of them might even become international businesses. And what we do is we wrap everything that a business owner needs together through a set of micro business services, put it in the cloud, and let the bank bundle it the way they want. Why do we choose? Eventually the customer will bundle it, but that's a step too far for now. And so what you get is that a business owner, let's take somebody who does, I don't know, who's a carpenter, he wants to do carpenting. and in the evening he's got to send out the invoices. Do you really need to go to Xero, open an invoice, send it via email, then go to your bank account to check whether the money has arrived, and then to find out when it's too late that you're short of funds, then you have to go to a credit committee that takes 6 weeks. That no model works. Okay, we say, so here we have Open Banking 1.0. I'm a bank and I am offering you APIs to all those services. I have a good API service to Xero or whatever accounting package. I have an API service to a lender or an invoice financer. I call that Open Banking 1.0 because what you're doing is not offering a service. What you're actually doing is saying, oh, I really care for you, but not enough to sort of offer it all to you through my own front door. So you can come into my front door if it's something that I already have on the menu. If it's not that, I'll send you to the neighbors and tell them that I sent you. And then there you can sort of cobble together whatever you need. That is not a service. And banks now have no longer an excuse to say, technology-wise, it's not possible. You can bring an app-like experience inside your own bank channel. And that entrepreneur goes to the bank app he already knows. They don't want to learn new stuff. They don't like all these user interfaces. And from that, they can make an invoice, send it, the bank collects the money, the bank sets the VAT aside in a separate account so he can't spend it. The bank will alert him when he needs financing. They can do him a 10-day offer or whatever. And that way you build a relevant service. So for us, that is open banking. So my first point would be, if people talk to you about open banking, please think beyond the consumer. The real money is to be made in the business line. And pull this further, also at the treasury end, it's quite ridiculous that we use the same data in a treasury management, cash management, foreign exchange product. That we have all these different packages from big suppliers to do more or less the same thing. So I think that that's where it's happening. And what I really liked about the McKinsey report is what it said, if incumbent banks these days fail, there's no reason for them to fail. It's because they have a double dip problem. Either they don't see the trend, or they see it, but they don't react to it. And don't go wild and try to solve everything, but find a niche. I always say bite back. Why do you give away your lending business to all sorts of apps? Why do you give away your foreign exchange business and your hedging business to the big companies of this world? Don't forget, fintechs will go after your profitable business. They're not going after the dump pipe. So, and the banks can take that back. So, I've talked to you about Open Banking 2.0. Stop sending your customers wandering around in an app store. So if you're going to make all these investments, make sure that they get the experience from you and that you get the gratification and the loyalty back for it. And then finally, I would say, if you want to do this, there's only one thing, and between Mark and myself, we've probably spoken to around 100 banks over the last 2.5 years that we've been busy in this particular field. Where it always goes wrong is the silo in the bank. And we appreciate that there are silos because we come from a transaction banking environment, so we know why it is and why it works. But if I speak to somebody and they say, oh, Corny, no, don't say the word gig, because then my colleague in SME, business banker, will go absolutely livid. That's his business. Lending is his business. Oh, with us, it's in the consumer end. As long as the bank doesn't break down the silos, at the very least at the customer level, because customers don't want to be in a silo, start at the customer level. The technology angle is also solvable because you don't need to uproot everything. You can do a lot with cloud-based services. And then I'm going to leave the most important one to you, Natalie, is talk about the culture and the behavior level. If you don't break down these silos, I think as a bank you should say, you know what, we're going to remain who we are, we're going to become a nice dump pipe, and we go for volume. Thank you.
Connie, thank you. Much change afoot. Now, John, I'm afraid, brings up another age problem from my point of view, which is that I joined Pricewaterhouse as a young trainee accountant. Before you were born, probably 20 years before I met Connie. And if you do the arithmetic here, it gets really bad indeed. John's very kindly come from PwC, where he's a financial services technology consulting partner and leads on open banking and payments, which covers a whole range from cyber to open banking, et cetera, et cetera, et cetera. John, thank you for everything. Great.
Everything.
Good.
Yes. Excellent. Thank you very much.
Thank you.
And I have been in the industry for 25 years, so I don't know how that helps with the
You can
maths
pay for
or not.
dinner.
Okay, I can pay for dinner. That's good. That's good. I'm going to talk through probably a few examples and answer 4 questions that I asked myself as I was coming here. And what you'll find is I'm reinforcing some of the points that both Alan and Connie made. So the first question is, what's been the impact of open banking to date? And what were the consequences of it being regulatory driven? So, as Alan said, implementation is pretty much done, but we're not seeing the impact in the market as a result of all of the new propositions coming out to our customers. We're not seeing the uptake of something that's done, there, ready to use for all of the customers in the market. Now, why? You analyse why is that, and banks have a huge amount of regulatory burden in delivering projects, delivering change, and also have a huge amount of cost pressures at the same time. So the program's really been treated in the same way as other regulatory programs. It's something we've got to do. Let's complete our compliance with what we need to do, and we're done. And in my view, that's quite a big mistake, because whilst it was regulatory driven to drive competition, a survey that we did just over a year ago actually highlighted that in competition it also means we're opening access to what is potentially 7.2 billion worth of new market by providing easier access to products. So banks have delivered the regulatory piece, but are now in a position of going, well, what's our strategy to exploit it? How are we going to take value out of a new market that's available to us and worth potentially 7.2 billion? Quite a big market. And I don't see at the moment all of those propositions coming. Why is that? I'm seeing a number of the CMA 9 now starting to think about, okay, how can we really exploit that? So it's actually quite interesting. I'm also doing some work with the banks in Canada. Canada aren't under the regulatory compliance, and they're also going through a general election at the moment. There you go, I said it first. But the banks are getting together and going, okay, this is the way that it's heading. But they're looking at it from a perspective, actually, it's opening a new market. So they're looking at it strategically to open themselves up, take the risk of disintermediation, but looking at it through the positive of new markets that we can gain access to and new money that we can gain access to. So a question there. We've got a solution, a bit like blockchain. It's how do we use it now? How do we use it for good? And we need to see the uptake on that. Another point then that I was asking myself. So what's going to drive customer uptake? We touched on a point around trust. I think people will remember when contactless cards came in. Everyone didn't really trust. Should I be using this? Are they going to take the right money off me? It was only the point when Transport for London brought in contactless round the tubes that everyone just found the process of accessing the travel a lot more easy. And as a result of that, trust in contactless grew, and pretty much most people use it in most locations now because the trust, actually it's easier, it makes my life easier, and I do trust it. So the inflection point will be customer experience driven and something that makes your life easier and goes, it's saving me time. Time is precious to everyone. We have a reducing amount of time available to us. So through the access of the data and the use of the data, it can save individuals time and effort. An example to kind of prove the technology point, within PwC we went, okay, is technology now ahead of strategy, and can it do things that we couldn't previously do? So we set about building a bank technically with what is one of the more complex retail products, a mortgage. So what did we do? We took Salesforce as a front end to coordinate the journey. We took Mambu as a banking back end. We then used OnFido for Know Your Customer onboarding. We then used Rightmove's APIs to get the value of the house. We then used Credit Kudos that can access your bank account details, so you don't need to send in your payslips to your bank anymore. It went, collected all your bank information from all of your banks and could spot where, and is intelligent, so can spot where there are anomalies and actually make the credit decision for you. Then moving through to the decision in principle for the mortgage and using DocuSign so that you get the document emailed to you, use DocuSign, say, yes, in principle, I want that mortgage. 8 minutes end to end without having any of the, 8 minutes for the process end to end. For us, not to build the bank, by the way, for us to build the bank was only 20 days of effort. So to stand it up, 20 days. We tied together, I think it was eight APIs. It was about 200 lines of code, and you've got an technically operating bank. Now that's a frictionless process that will drive customer uptake, and it will also save money for banks. So my next statement, are we in a world of a changing paradigm? I think we're in a world of a changing paradigm. As a technologist, the business have always beaten me up because I can't provide the business what they want to do. I think with the technologies and the acceleration in the technologies that we have now, I'm a technologist, so they're saying, where's your strategy? I can deliver so much more for you now, Mr. Business, where's your strategy? And that's where I then tie back to, we took open banking as regulatory first. Now it is the time for people to really think about the strategies. Consider yourselves unconstrained by technology. If I can build a bank in 20 days, you can do a hell of a lot with your change budget nowadays. Really think about your strategy and what you want to do. There's a new 7.2 billion market out there. You will have product lines that are eroded, but there's a lot more access to new markets out there for you as well. So what you're going to do about it, just open your data up, give it away and accept being disintermediated, or are you really going to take advantage of what is out there for you? So, what do banks need to do? I've really threaded that through all of the story as I've gone through what I've said. Really understand what your role as a bank is. Are you just going to be a manufacturer and a supplier through your own channel of your own products? Or are you going to take advantage of an ecosystem and put your products, open your products through APIs so that they can be embedded in other marketplaces? Selling my bank's products through Amazon, a drop down in the Amazon box of buying financial products in one place, my ISAs, my loans, everything in one place so I can get the best deal that's available for me in the market. So a really important time now for banks to decide what the strategy is going forward in order to take advantage of what started off as regulatory but is a massive opportunity.
John, thank you. This is very exciting times. In the middle of that, you compared open banking with blockchain, and one of our best ever best ever programs on CISI TV in terms of viewing figures and ratings was one which started off being called The Future of Blockchain, and it featured a man called Tim Jones, former chief executive of NatWest Retail, inventor of Mondex, really super guy all round, so knows about banking, knows about tech. And after Tim's talk, we renamed it Blockchain as Baloney, which is a bit extreme, but we got great viewing figures. Now, what all this needs is leadership, which is where Natalie comes in, last but far from least. Natalie's got 20 years or so experience in financial markets, in many different areas, particularly including leadership. Yeah. She is doing, for instance, a talk in this very room tomorrow night. We get a lot of our money here, which is no money at all, on leadership in the fourth industrial revolution with a friend called Alexander van der Putte, who's a Belgian who teaches at IEC Business School in Madrid and does a number of other things. Super guy. There are seats available. If anyone wants to come, just see me or a colleague afterwards. Very welcome. Starts at 6 o'clock. But Natalie, how do we get to this beautiful new future that John's just described?
Great, thank you. And yes, it is exciting, right? We're talking about transforming banking, about new revenue streams, about increased competition, that great market that we have out there. But the only way that we can really realize the potential of this is through people, right? It's your customers, it's the consumers, it's everyone that's interacting with the ecosystem. But it's also the leaders of the banks, of the financial institutions, the third parties, the regulators. And I truly believe that their perceptions, their skills, and their working practices need to change. We need to learn from each other, and we need to work together. And only then can this be successful. So we really need to think about how we turn our industry on its head. And I want to talk to you about three things. Firstly, it's about rebalancing power, creating a collective leadership. So we talked about trust, but it's really about how do the leaders take accountability for that and work together to rebuild trust in our industry. Secondly, it's about redefining talent and the workforce. So we really need to build the capability to be able to adapt and drive our digital agenda to achieve all these great things that we've just talked about. And thirdly, it's really about how do we reset performance and reward models. Because at the end of the day, we need a motivator that's really going to drive a culture change for our organisations for this to be successful and put customer right front and centre of everything we do. And most of all, we need to do this today. As we've all said, we cannot wait, and it needs to be acted upon. As Connie was saying, let's not let this just be a trend, another blip. Let's make sure that we're grabbing this and we're actually doing something about it. So firstly, when we think about rebalancing that power and collective leadership to drive trust. Now, I think trust, we've all talked about it. We've got a trust framework that Alan was saying it's built in the standards that we have here. We're starting to rebuild trust. But really, as World Economic Forum talks about, trust is our ultimate currency. Yes, data is the new gold, but really trust is the one that we should be focusing on. And how do we rebuild that when it can be so easily broken? I mean, only last week we saw one of the big banks again in the news for misconduct. It's not something that's going away, and as an industry, we continue to be the least trusted industry, yet we are trying to do something about it. And when I think about trust, I think about it in two ways. I think about character, yes, but also capability. And as you were saying, John, if we don't trust in this, we will only have those early adopters taking it up. We need to be able to cross the chasm, as it were, by really building trust across the products, the services, and everything, so we can take full advantage of everything that is on offer. And I think it really comes down to our leadership at the top across all financial institutions. And when we talk about trust, I think it is just one attribute, and there are four, and we're talking about this tomorrow around leadership in the fourth industrial revolution. For me, there are four sort of personas that really leaders need to start to espouse and really develop. One is being humble and inclusive. So if you look at the likes of Oak North, Starling Bank, they're all about openness and transparency at the top. And trust is just integral to everything they do, and they're really building their businesses around that. Then secondly, for me, it's around curiosity and connectedness. Connie and I were having a coffee before, and we were talking about how important it is not to be complacent, continue to be curious in what you're doing, continue to understand, but do that by creating human connections, talking to your people, being down there on the floor, understanding their social needs. This is a societal change. We can't just do it in our ivory towers, thinking up our strategies and building that. We need to really understand. And thirdly, for me, is about being reinventing yourselves, being disruptive, not playing safe. I think if we're going to make the most of this, we need to actually, again, not be complacent, but keep pushing the boundaries and really think about the change, the constant change that's around us. I met at a bank the other day, and they were like, "Oh, Natalie, yes, you can't teach me anything about culture." Because I've done it before, I've built this business, I've created this. I was like, yeah, that recipe is not going to just work again. Everything has changed that you built that last business on, or the last business that you led. You need to appreciate that we need to continuously learn. None of us have got all the answers, and we need to work together to do it. And so fourthly, for me, it's about a purposeful, customer-centric leadership. And I think open banking gives us that more noble purpose. It is the force for good. It is about us as a leadership, as an industry, working together to think about how do we how do we get the most out of this where no one, if no one has the credit for it, then we all will benefit and reap reward. So for me, that's really the first piece about power. The second piece for me is about redefining our talent and our workplace. So I think it's not new to any of you that digital skills and innovation and all of that is so core to making this a success. It's about having the right skills, the right people in the right roles, managed by the right people as well. And actually, financial services at the moment, we're on the edge of a renewed war on talent, because not only are digital skills scarce across all industries, but for us, people aren't joining financial services anymore. If you look at millennials and Generation Z, they are actually moving more towards, yes, fintechs, but even fintechs themselves are saying that they're worried about a skill shortage in the next 3 years. 75% of them are saying that they are worried that they won't have the skills and capabilities they do need to accelerate their growth. So we really need to think about that, and I think it's in 3 ways. So firstly, thinking about the skills you need. So if we're defined our strategy, we know where we're going, great. What are the services we need to deliver that? But then what are the skills? And it's not just technical skills and IQ, it's not just the social skills anymore and your EQ, but it's also, as a great person said to me the other day, it's AQ, it's adaptability, it's being able to constantly change and evolve ourselves. Secondly, then, it's about how do we source talent. So let's not just think, oh, I know a person for that, or I've got a data scientist, I just need to get him into my organization, without thinking about there's a whole spectrum of talent out there now. They don't have to be on your balance sheet. You can access talent and collaborators and partners across the industry without necessarily having them working full time. And at the end of the day, we're 100-year careers now we're talking about. So, let's think about the whole demographic. Let's think about how and where and why we can bring all different talent into our organisation. So really thinking about an open talent economy. And then thirdly, it's about, once you've got them in, how are you making sure you develop, manage and lead them? Because at the end of the day, millennials are not going to stay in your organisation forever. They are there, they want to develop and learn, and then they will move to another organisation. And that's okay, because actually if they come back and they come with renewed insight and skills for you, that is what's key. And then moving into my last point, which is about actually resetting performance and reward models to increase and really encourage the right culture behaviour. So for us, for customer to be front and centre, we need to collaborate and we need to communicate. So Alan and I actually met on Monday as well, and we were talking about how collaboration is so key and so vital to this. The banks need to talk to one another. The banks need to come together, not just the banks, all financial institutions need to come together, because we can make the most out of this if we work together. We can find those solutions, we can iron out all of the issues. And as Connie was saying, people are still working in their silos, let alone collaborating in your organisation. So let's try and look at how we can work together to really make a difference. And also the second point for me on that is communication. To John's point, how do we get out there of the benefits of open banking? How do we make that turn, cross the chasm a lot quicker for all of the consumers and customers? I mean, there's a huge proportion of people that won't just all of a sudden take it and run with it. They'll be fearful of how people are using their data, how is it being shared, what does it mean for them? So we should together have one voice about how we reduce that fear and how we communicate how this is important, not just for us as individuals, but our industry to make a difference. And I think that really surmises for me those 3 points. So let's work together, let's be collaborative, we have a wider ambition with open banking and a force for good. So we can make this happen. It's a great opportunity. We just need to nudge ourselves in the right direction.
Natalie, brilliant. Thank you very much indeed. Brilliant. Great stuff all round. I'm sure there are many comments, questions. Who would like to fire away? Would you mind please waiting for a microphone, which we will get to you, not for shouting in the room, but for CISI TV purposes. Any comments, questions?
Yes,
So, thanks.
Thank you. I'm just just wondering what the feeling is amongst the panel in relation to the new avenues or windows that are opened from a cyber perspective by APIs, you know, multiple APIs maybe sitting on top of each other, et cetera, and whether you have any comments on that.
Anyone care to go first?
It's
Tom?
it's really a fact, and it's everywhere. Because open architectures and cybersecurity is all around having the right controls in everything you do, the right processes in order with what you're selecting to work with. It has to be at the forefront of the thinking as you're going on this journey, because it's fundamental to the trust piece that you're protected from the cyber risks. So it's a fact that it's there. It's a fact that as you get more proliferation of the services that you're using, the risk increases. It just means you have to redouble your efforts on the controls you put in place in order to mitigate that risk.
I have a point on that as well. And I think it's unfortunately a fact of life that we need to sort of be aware that, like Oracle has parking spaces for the CEO, so do the very large fraud companies as well that operate all over the world. They are organized, they have a target per year. They're very well organized businesses, so they are definitely a threat. And I think one of the things that I always feel so sorry for, if you look at banks, and I've worked with banks and IT departments for a very long time, is that now you see this great divide whereby we have the sandboxes and the inner centers and all the hip young kids work there and they're cool. And then the idiots with the rubber sole shoes work in the basement. And I've recently written a blog about this, and I say the true heroes of the bank are the boys and girls who keep the bank safe and secure and operationally excellent. And it's another point towards the whole open banking thing. I think it is impossible to ask of somebody who's got the mindset to keep something secure and safe and operationally excellent, to ask them to be hugely innovative and come up with new stuff. And I always say, if you're in a hospital, the operating theater is not built by the surgeon. So what we should do is get the best equipment, the best tech, the new ideas from the tech industry, and banks should focus their IT stuff very much in embedding that in the organization, making it part of the ecosystem, but most of all keeping the banks safe and operationally excellent. And I think those people are the true heroes, and I always break a lance for them.
Thank you.
I mean, really briefly, because I'm not a technologist, so one of the things that we recognise we need to do is to make sure the standard includes a security protocol which is as leading edge as it can be. So we contributed to global standard, OpenID Foundation, to help them create a global standard around this. So I think you want to ensure that the standard you're putting out there is the best possible it can be, recognising that it's always got to evolve as the guys that you're talking about try to hack it and break it down. So there's, it's an ongoing process to make sure that the standards we have in place are fit for purpose.
And there's a balance with user experience.
Always.
Because people want everything. They want it to be flawless. They want it to be ultra safe. And
There's a question from a lady over there, then the gentleman in the front. So lady on the left.
He more or less asked what I was going to ask.
Okay, the gentleman here in the white.
Thank you. We talked a lot about trust so far. I think one of the key elements of the trust is, at the end of the day, liability when it comes to consumers of the service. In this distributed framework, where lies the responsibility and the liability if something goes indeed wrong?
Yeah.
well, I could take
So GDPR is very clear about who's responsible for data and who's responsible for ensuring that data is safe and who's liable if it goes to the wrong place. I think you will always, in a sharing environment, have an argument about who lost it. So was it the bank or was it the third party? And I think the key thing there is to ensure you have a framework in place for resolving those disputes as far as you can get those resolved when there's an argument between two organisations. But at the end of the day, if it becomes an argument, GDPR is very clear that both of those organisations have a responsibility to keep their data safe and to ensure that the requirements of GDPR are complied with, so both organisations. But who loses it, they're the guys responsible at the end of the day for losing it. So what we put in place is a dispute management system, but all that will do is ensure that there's a way of communicating. It's not a liability framework. So to be clear, we haven't created in open banking a liability framework for open banking. It doesn't exist. It's GDPR.
And I think building on that, to your point, Alan, it's people taking responsibility and owning up and saying, okay, this was my fault or jointly fault, and not doing this. Because I think rebuilding it as an industry, I think it's really important that we learn, we put our hands up and we learn and we take accountability from it.
Thank you. Can you just hang on for the microphone? Yeah, please do, of course, yeah. Just hang on for the microphone. From the point of view of people watching at home.
John, I want to bring up a hypothetical proposition. I liked your idea of actually building open banking example. Now, if I was a property entrepreneur and I was doing, say, buy-to-let, and I wanted to raise some money, what would your ticket size be? Because that's what it comes down to. We can have the fanciest tech we like. Is there the money available? So I want to buy a property and I quickly need £150,000. Is the money there once you've done all the credit checks on me, etc., to let me, do my thing?
Can the money be transferred to you?
Yeah, once you've done your credit checks because I know this from guys that I'm talking to. This is one of the problems. I know somebody who actually had to fulfill this requirement. He actually had to take one of his insurance policies and, take the money from that. And of course he lost 40% tax on it.
Yeah, so in the user journey that we created, the money is transferred at that point. Obviously, the individual banks have to decide at what point in the journey is it a loan without the property being transferred at that point of time. That will come down to the individual bank policy. The technical solution that we built, the money was there in the core bank engine bank account at the end of that process, but it will always come down to obviously the risk and the policy within the individual bank.
Because that seems to me the problem when you say you're financing self-employed or whatever, people who come up with a good idea. Is the money actually available? Provided, you've got to do your proper credit checks, but is the money there?
Any more comments on that? Thank you. Good question. Any more thoughts, comments from people?
I'll touch on that point if I can. So this infrastructure that PwC built, or was that purely internal, or was that with a pilot, or was that for someone else?
So, very, very good question. Is purely internal. Mm-hmm. It is using production APIs. Mm-hmm. Has it gone through an internal governance to say that it's compliant? Is there a banking license? No, not at all. But that emphasizes the point that it's actually not the technology that's on the critical path of delivering things now. A lot of the time it is the processes around it. So you have to look at how you can streamline those processes to get to market quickly. But don't think that it's the technology that's holding you back now.
Yeah. And that alone is an evangelical mission, I can promise you, because we have technology has leapt on to such incredible forces in terms of lower cost and speed, and much more robust and elastic rather than scalable. Remember in the old days, banks had to have massive data centers because at Christmas everybody shops at the same time and we don't want our payments to go through. And now those solutions can scale up and down with demand, which is very different from always having the maximum available. So the cost savings, and even for me, I'm still always gobsmacked by what is possible, but it's very hard to explain that to bankers who've been bitten in the bum, as we say, for years by massive license structures and projects going wrong. So it's very, very important to go step by step and start with really new tech, like new.
And John, the real question in relation to those APIs that you effectively plug one on top of the other is the accuracy of the end result, right? So independently, each of those APIs could be accurate or not, as the case may be. But obviously, as you add them on top of each other, the likelihood of them being less and less accurate as you go through the process, and then spewing out a result which hasn't had any, human look at it or, go over it itself. That's the question. I mean, how accurate is the end result, and what did you do to sort of check the accuracy of that through the project?
Interesting point. Each API is providing a standalone service and a standalone action, and they don't build upon the output of one to feed into the other. So the accuracy is down to the individual API. So accuracy is there and spot on. So that isn't an issue in this space. Then through the usual process of testing.
Let me give you an example of that. So you talked about the Rightmove API to look up a house price in a particular road.
Mm-hmm.
In an example, perhaps there's a similar name or the same name, or the API which comes from Google is incorrect, or the postcode's wrong. These are the kinds of things that I'm talking about, and that could be exacerbated through the chain of the process.
No, that's true. We only check the endpoint API, not a daisy chain behind that endpoint. But again,
but in
you
a
still.
live situation, you would have to.
Yeah.
It's the same KYC.
Yeah.
I mean, honestly, yes.
But clearly testing all the way through.
Absolutely. But in a live situation, you would do. You would check all those things.
Sure.
Yeah.
I think building on that as well is get the pilot right. It's all working, but then how do you scale? So we talk to a lot of banks who are like, great, we've done this, Natalie, we've done it in pockets, but how do we then move this out to the rest of the organisation, particularly around skills and culture? But it's the same from a technology point. Is it works? It's great. Let's look at how we help you scale that across your organisation.
Yeah, agreed.
Thank you.
Thank you for these great questions. I'm going to ask the speakers to make some final remarks in reverse order, starting with Natalie this time. But this brings to mind something I read the other night in a book by a wonderful writer called Robert Macfarlane, who teaches English at Cambridge, has in his time climbed some really big mountains, and has just published a book about a much more frightening place, which is underground, caves and so on. And he makes the analogy that when George Mallory was climbing Everest, someone asked, famous line there, someone asked him, why do you want to do that? And he said, because it's there. But when you meet these people going to deep caves, and I actually met some of them in Wales at the weekend, going into deep caves, and you ask them, why are you doing this? And they say, because it's not there. And what they mean is that no one quite knows what's there, but we're going to find out where it is and so on. And it sounds to me like much of this for our sector is we're doing it because it's not there. Crossing the Rubicon, yes, indeed. Natalie, any final comments, remarks?
Yeah, definitely. And I think that is so key, right? This is an exciting transformation of financial services. And I think we really need to think about how do we realise its true potential by everyone that interacts with it. So thinking about leadership, thinking about trust, thinking about talent, and helping open banking realise this ambition of a force for good.
Thank you. John?
Yes. Building on one of the points Natalie made, actually, and scarcity of resource. I think we have an abundance of resource that we're, a particular resource that we're not using enough at the moment across our industry. And it's something everyone has, but it's been drilled out of most of people in financial services. And that's just imagination now. Yeah. There are so many organisations that are doing, or so many industries that are doing a much better job at reimagining the possible, that we've just got to build some of that back into our financial services culture.
Thank you. Connie?
Yeah, for me, I am also, John really struck a chord with me. It's all about monetizing the investments people have made in our open banking infrastructure, and the money is in the market, it's never in your own system. And so yes, I greatly believe that banks, and I want to give you this optimistic feel, there is place for you, but you've got to start thinking as a TPP. And finally, although not British by birth, I would say if you doubt about where to go, think about Henry V and the Battle of Agincourt. And this is truly, we are crossing the Rubicon, that was not him, but still, he who has no stomach for this fight, let him depart. His passport shall be made and crowns put in his purse for a safe voyage, because that's the type of courage we need to keep moving. But never a more exciting time than this.
Great. And the final word to Alan.
Well, it's difficult to come to a final word given the excellent comments so far. I had a lot of great comments. One of the things that came through to me was John talking about it not being a compliance program, and you talking, Connie, about banks being in a good position to benefit from that. And I think you put those two together, there is a massive opportunity for banks. There's also a big threat to banks. Let's be fair. There are challenger banks out there. There are TPPs out there, some of which probably aren't out there yet, in fact. And there's a lot of competition coming in, new ways to do stuff. And banks have an opportunity to think about how they can make money in a different way to the way they have made money before. But it will take courage for them to do that. But I don't believe all of them are necessarily set up in terms of the way their business culture operates to be able to do that. And I think that's one of the biggest difficulties. And talking about the talent point, and totally agree with the comments on talent. I've been listening to a guy, and his name's Ken Robinson. I'm listening to his TED Talks and he talks a lot about people having imagination, and that everyone has imagination, and our education system, the kind of learning by rote education system that was designed probably 200 years ago before the first industrial revolution, kind of pushes imagination out of people. And actually what we do need to do is think through how we redesign our education system so that the talent that is already in people can be used to better effect to help them make the most of the opportunities that technology can give us.
Thank you, Alan.
Can
I end by thanking Anna and her colleagues at the Chartered Banker Institute for inviting us to get involved in this in the first place. It's been a really great event. Thank you very much.
Thank you.
Thank you to colleagues from the Chartered Banker Institute for coming and joining colleagues from CISI. Thanks for watching on the WeBox, but most of all, thank you very much to our great panel. Really terrific event. Thank you.
Thank you.